go to review charts. Recently viewed. There's tons of stuff to go over. Hey, everybody. Hey, LW. How are you? Sunday, fun day. Oh. So, wait for people to file in here a little bit. Let's see who we get. There we go. We have people coming in now. Everybody hear me clearly? All right, perfect. Hey, Aaron. Hey, Emily. All right, so let's just begin. So for me, hey, Ro. So for me, really what I want to do is just go over the areas that you want to go over. So if you have stocks that you want to review, just let me know. That's really what I wanted to focus on tonight. If there were very specific things that you wanted to review stock wise, I'd rather start with stocks and individual names that we can go over. And then if there's topics within the hour, we can kind of address them as well. All right. So the first one I have is RIG. So I looked at this name on Friday and I liked it. And then we saw this action in it and it really rejected that level. So what I would argue is that you need to kind of watch that key level, right? Because it's not getting above that. And because it's not staying above that, you're having an issue. So let's bring this down a little bit and just drill into it. So you open here, you test this level, you fail, and you come down. So that whole space is doing this. And you have this huge rejection in red, and you do slice this level. So if you took out a lower low here, that would mean that you're breaking this little wedge line that you've had now since down here, right? And you've actually had it all the way down here. I mean, this first higher high and then just kept going. So if that happens, you're heading to this 8-day, right? That would be the first level that you're going to head to. And so you have to make a decision if you are willing to go through that or not. And that's just something that only, you can decide. I would say this about this space. I did like the name for a trade, but it did fail. It did fail to get above this level, and you can see how it acts. But in regards to all energy names, just in general, let's put this over here for a second. I was looking at this today, just getting ready, and we're above all these moving averages, so we're going to go over that and clean that up really quickly. But let's just get rid of these for a moment so you can understand. This is what's going on with the energy sector. So I'm up, hitting these lines, I'm up, and now these trend lines become resistance. So I'm bumping right into resistance, and this red down bar is still in control. So when you have a long red down bar like that, they stay in control of the move until they're negated. It's the easiest way to explain it. So until you get above that level, it's sell the rallies in energy names. So I would be careful with that name since it rolled there. So do I review stocks in the context of option tradings? Yes, Mo, I do. Can we go over CRISP? Yes, let's go over CRISP because I think you're going to have some action tomorrow. So let's review this one. Okay. So in regards to CRISP, okay. So let's put this up here. So in regards to CRISP, what I'm noticing is, here, let me just throw this line in there. So what I'm noticing with CRISP is you have this 137 level, right? So as soon as you broke that level, look, this is just setting up perfectly from that level on, right? And this was on Friday. We finally broke through it. And it's important to understand that. Now, if you see all these averages pointing up like they are, and you're starting to see your volume pointing up, the chances of this going higher are pretty significant. Now, look at this. And I do look at things like this because I do think it's somewhat relevant. So you have a trend line here and you have a trend line here, right? Well, I'm going to just drop this down to here for a moment. Okay. So this is really where you're at. And the goal is to make these lines as close to each other in the same trajectory as possible. You actually really should just clone this and then just move it over. And you'll see it's pretty much in line with where I'm at. But the reason you do that is because that shows you what the true channel is. What you're seeing here is if you break through this and you're above this level, all of this over here on the left hand of the screen, let me pull this down a little bit. All this on the left-hand side is available to be played with. So I think that's really important to understand. Like this whole side over here is getting to a point where it's becoming very interesting. So I do think you could go a lot higher. I think you could get to this 175 level, 176 level. And I think you're there. I mean, I really think you just get a higher high here and you're gone. I don't see anything that's really going to stop it. You know, you really have a decent move setting up here, and the volume's increasing. And I bet you, even if we look at the relative volume, it's substantially higher than what we're used to seeing, even though we have this little tweak. Yeah. So you're like, this is trading at like 1.5 to 1 3/4 average volume these past couple of days right here. So I like that. And we can look at the relative strength while we're going through it. Yep. And this is showing you everything that you need to see. So, I mean, even the relative strength from here, we're breaking and we're pushing higher. So I would expect this to go. I mean, I would expect this to start heading higher. I like this name a lot. And I think this will continue. So let's go to the next one. So let's just go Wish. So Wish, you know, I think has massive potential. There's certain patterns to kind of remember. And let me just give you this one because this is important. This is a new issue and it got busted. And what do I mean by getting busted? Meaning it went public and then the next day or week we broke that low and that opening price. And that's over here. Okay. That's that break right here. We broke that low, 1963. We rallied, we broke it, we rallied up, we attempted that, and then you have these other levels that are up here with it, right? Okay. So, I mean, that's obviously not even remotely in play yet, but you have all this that's going on in here. So I'm just going to throw this over here for a minute as we drill into this. Now, there's a couple key things that you need to pay attention to here. When you start seeing this, when you start seeing the 8 just start crossing levels like this, I'd want it to be the 21 if there was longer time frames, but there's not. So what you want to look for is you want to look for moves like this and then determine what you're going to do about it, right? So in other words, when you see a move like this, where the 8 and the 21 are crossing and the 8 and the 50 are crossing, it's definitely something that you need to pay attention to. And for me, what's happening is we're respecting this 8 the whole way up, right? So like every single time we touch the 8, it's bouncing. That is showing immense here. Look at this. That is just showing immense strength for something that I believe is bottomed. Now, if you roll out of this and just focus on this part of it, you could see the key issue. The key issue has been this 1444. 1450 trying to print it happens pre-market, but 1450, you know, when the market's open is just like an anomaly. But we did get in there and start taking some of it out, whoever it is, at that level. So I would expect to see a push to 1545. And I've been saying that I think that you can see this 19 level retested fairly quickly when you're through all this. And you have a decent base here. And look. So, and you could, I mean, we're just off the charts with the relative volume. It's just off the charts, right? I mean, this break was over 10x, which is insanity. This break is 5x. I mean, it's real volume that's coming into this. So I like this idea a lot. And I think it has massive potential. I think it could be a big winner for the year, frankly. So Let's just keep on rolling here. So Merck and UNH. Let's take a look. So Merck. I mean, the thing about Merck is you're really at this level, right? And you have to get through that, and you're having trouble there. So I'd be careful here because this is where it would roll. This is where and by roll, what I mean is here, like, look at this too with Merck, just so you can see what I'm talking about. See that level right there? So what I would be afraid of is I would be afraid of it respecting this channel and rolling. And when I say rolling, what I mean is it coming back down. I'd be afraid of that up here because you have a trend, and if you can almost see the channel, right? So if you clone this, you can almost see this channel right here. So, right, let me just draw that so you can see it. So I'm at the upper end of it, and I failed to break a resistance line. I failed to close above it because I believe that when you see a wick, it is a price rejection. That is my belief in how I trade. So that is a rejection of price. So I would be somewhat apprehensive to be in this here. So that's my opinion of Merck. If you bought it down here and you're in the trade, that's awesome. If it takes out that low, it's confirmed that you're probably going lower. UNH. So UNH I like a lot, right? Like you're setting up really nicely here. See these breaks? Now you have to get above that 50-day and stay above it, and you're right there. But I like this one. I think this could be a winner. So let's look at the volume, see what we have going on there. Yeah, I mean, that's just insane volume. Whether it's part of a rebalancing or not, I'm not sure if this one was part of a rebalancing or not. But yeah, I mean, that's just insane volume. And that's a really solid move. So you'd like to see it continue. I mean, your first level that you have to just get above that wick. I think if you get above 410, you probably see a fairly decent move. And you have a really nice channel right here. Look, let's get rid of this and this for a moment. We can clear these up, but you can see this channel right here. We can get rid of all these segment lines and just show you what I'm talking about. So I mean, once you're back in this, which is, from here over, you'd have to flip back into it. But your first move is to get over 410. And then when you get over 410, you should be in decent shape to start trying to get over 417, then get over the wick. And by the time you're over that 427 wick, you're back in this channel. I like UNH a lot. I can see, I think that's the better of the two trades you just went over, frankly. So let's just say 10. Sure, Jen, let's do 10. This is the one we're doing now. 10. So, 10 to me has been just honestly been playing games and they've been walking you down. It's like whoever's the specialist in this name or whoever's playing with it is doing an excellent job because they got me on it the other day where I bought it on this break and then it didn't close. And what they're doing is they're walking us down. And as they're walking us down, they're triggering levels, right? Like this resistance level here to make us think that it's going to, finally break through, but it doesn't break through. And then they pull it back down. So that means that somebody's up there doing this to sell. That would make me somewhat concerned. So I would not be in this. I personally am not going to get back in this till I'm above 22 and a half. And I'd like to see a close at this point because I've had so many failed rallies. But you have a huge flag that you're building here, right? We can move this aside and just look at this, right? I mean, here's your flag and you've had a couple days where you're out of it. So you really want to see this higher level now come into play and you want to get out of that level and you're having a hard time. See how it failed right here. So I would avoid it, Jen, until it gets to that. So let's just keep going. Micron. MU. So Micron, I think that You have to focus on this one just a little bit, right? So let's just focus here for a moment. You've gotten to the 50-day, and then what happened? We rejected right there. So as soon as you got to that 50-day moving average, we completely rejected. And that's not what we want to see at all. So I would stay away from that. I would not go near this until I get above that level. I mean, that's the quick answer. Now, look, I'm just going to try and get through these a little faster so we can cover more names. I have to stay above that. If I roll below that, I have to get out. So that's how you need to look at Micron. But, it's not something I would be rushing into right now. TLIS, Jordo, with RSI. Sure. TLSI. TSLI. How am I getting this wrong? Where am I wrong? TLIS. Okay, that's where I'm wrong. TLIS. Okay. Let's overlay this with RSI and see what we get. Yeah, I mean, I see what you're saying. Let's get rid of a couple things here. Let's get rid of these moving averages. And let's focus on this for a moment. So here's your level, right? I mean, that's really where you're trying to get to, right? You're trying to get above that level. And then you're here. So what is that going to tell us? What is that really telling us? It's not really telling us a lot. I mean, the one thing that you're seeing, which is probably what you're looking at, is this, right? You have this level down here, but over time, what do you really have? You have this. So it's telling you that the magnitude of the move is changing, right? That the magnitude is setting up to go higher, but you're just not there yet. It's just not getting to that level. By the time you get through this 58, it's probably there. But this is not something that I'd be rushing into until I get above like 1236. If I get above this level here, I could push. But until then, it's not something that I would be rushing into. So, of course, and let's just keep going. And I know I just missed a couple. There we are. FDX, UPS, and CAT. Yep, let's do it, Aaron. FDX. So FDX, it clearly broke down, right? There's really no other way to say it. Let's clear this up. Let's get rid of the RSI. This is just, it just broke. And the one thing is, sometimes I leave these lines in for a little bit. And you can see how you got to this line and you didn't close below the downward trend line. But this gap, the only real trade here is a short-term trade at this point to fill the gap, right? That's really your only move. For me, let me rephrase that. That's my only move here that I see that would make any sense. And I don't know that I would even do that because I think that it's going to be a muted move because people have to get out still. You haven't been basing for a while where people have gotten out. So anything like that's going to lead me to believe it's going to be difficult. But really what you're looking at is getting to about this 299 range after you get through 295. So you're really looking at a 4-point range. I don't know that it's worth it. This is busted. This is and I'm just going to focus on this. This is your rising channel. And then what happens? It just gets whacked. And I believe it got whacked on earnings, right? So yeah. And the earnings weren't bad. I mean, the other stocks actually went up on it. I don't know what people saw that made it get hit, but it got hit nonetheless. And if you overlay this with your 50-day, you can see that's not where you want to be. And we can throw this in. So, and let's just throw this back out. And now let's get rid of all these horizontal lines so we can just focus on this for a moment. So you have a 50-20. So your 50-day moving average and your 21-day moving average are crossing to the downside. So that's not good. This is a bearish signal and should be looked upon as a bearish signal. And knowing where these are and the fact that we have to get above them in here, I probably wouldn't even attempt this as a gap trade. So if you're in it, you just might want to move on with your life. If you're thinking about trying to get in it, this is not the space where I would personally get in it. So just consider that, but let's just keep going. So in regards to cat, Aaron, let's just look at it. I mean, all these industrials have broken down like this. So you have clearly broken that trend line right here, right? So you had a trend line right here, and that one's gone. You had another one here. That one's gone. So what we're seeing here, and let's just get rid of these indicators for a moment, right? And you can see where I'm going with this. Throw the indicators back in. So this red bar, now we can get rid of all these lines for a moment, just clear it up. So, and let's get rid of all these as well. So what you're getting here is that when you break this long red bar right here, we'll click this off for a minute. This long red bar is in charge. That's the easiest way to explain what just transpired. When you have a long red bar like that, that's what's in charge. And this is what happened with it. You just had follow through after follow through and selling. All we're seeing here is a dead cat bounce. That's all we're seeing. And it's not something you want to get involved with. If you want to try to trade it up, that's fine. But you really are trading it till you get to about this level, which is just going to get you to that bar. I mean, that's really where you're going to go with it. And that might be fine. That might be what you're looking for. But that's really where you're heading with it. So keep that, keep that in mind. And then the other one was UPST, which I'm more than happy to do. On this one, I came out and did like a really quick trade on it. Frankly, we broke this one level. And then as soon as we got above it, it became pretty clear that there was a little trade probability, right when we got through this 125. If you looked at this on the hourly, let's just go through it. So if you looked at this on the hourly, let's get rid of these indicators. So, and you can see this 134 level. Once we broke through right here, to me, there was the opportunity for a trade, and you can overlay this with the volume and we could get into the trade, but let's just stay focused. So this couldn't be any clearer what happened, right? Here's your 134.82, and we'll look at it on the daily. This is an hourly chart on UPST. And what happened? We got right to 134.50 and we rejected. And as soon as we did that, and you can look at that rejection, and how I do it is just by drilling into a 15-minute, and you can clearly see you tried to get through it. You couldn't. You give it some room because of where you're in it. It forms this long bar and this somewhat kind of doji, which gives us an evening star pattern. I break that level, and there's really very little reason to be in it. And depending upon the move that you're using, you can even go and look at a 5-minute, and the 5-minute would even have gotten you out even sooner, right? The 5-minute evening star would have gotten you out at 133. So, and when you get to this level and you get to resistance levels, you can use a 1, a 5, a 15-minute. Depends how badly you want to stay in the trade and what you're most comfortable using. So I hope that is possible. Getting out. Yeah, I mean, if you're trying to get out of it, I would get out of the cat. And also, Aaron, just for reference, it's kind of funny, but like this broke. I mean, this couldn't have done any worse, this UPST. So, I mean, now you have this level here where you have this bar down, and like, look, I mean, this could be in a textbook. It's so perfect, right? I mean, you have a bear flag. So no matter how you want to slice it and get rid of, we can get rid of this, but here's your flagpole, and then here's your flag. So this is definitely not something that you want to be jumping into right here and owning. Just my opinion. So let's just keep going. Hey, Guy. So hopefully that's helpful, Aaron. All right. So let's do this. Let's do SKYT. You got it. SKYT. So newer issue, right? You should be able to see what's happening here, and maybe not, but let's just draw it out so that you can say it. So right here, this 31.58 or 59, right? Look at this. And that's what I'm saying. When these red bars break, so let's get rid of this for a minute so you can see where I'm going with this and what the heck I'm talking about. So there's your rising wedge. And if we drew this up here, you would see it up here, right? So you kind of see it already, but here. So we're just going to kind of leave that right there for a moment. It's actually awful. Hold on. There you go. So just to kind of give you an understanding of where these lines are. So you get to the top of this one and you follow it down. It probably hits here or here. But what you're seeing here is you have a rising channel. And when you have a rising wedge channel, the majority of the time they hang, and people call them hangmans or frozen ropes. And essentially it ends with a long, it ends with a long red, nasty bar. I mean, I hate to laugh, but it's just kind of funny, but like, this is the pattern. This is how they end, right? It's not like you're breaking out of a flag. The rising wedges, these patterns exist everywhere. So you can see, like, as soon as you take out that lower low, that's it. It's had enough. You rally up, but you never get above and stay above or close above the opening print, which lets you know that you have sellers up here. And now you have this channel, and look at what's happening here. This bottom channel. So in other words, you have an upper channel here, and this is the lower trend line of the upper channel. And now this level of support has flipped to what? Resistance. So you're wedged in here, and you completely rejected the other day, encapsulated this bar in red. The other one's green, which means this one was up and this one was down. And so I have a bearish engulfing pattern at the crux of a resistance line and a rising trend line. So there is no reason that I would go anywhere near this right now. If I was in this, I would be out. So I hope that's somewhat helpful. So dead cat. Yeah. Actually, it's funny, Jerry. I didn't even think about that. I just came out with it, but I guess I am kind of funny. So that was kind of funny anyway, but it was a dead cat bounce. So that's what they're called. I like Ford a lot. And whenever someone asks me to look at Ford, I always do this. And I show this chart because I don't think people truly understand the significance of breaking a 21-year chart. It's pretty substantial. It's pretty substantial to look at on the monthly. And for me, what it means is that this longer term trend is probably heading up. All I have to do is get above this 17 level and close above there on the monthly, and I'm there. Now, we could reject that level, which it seems like we might reject on the first time here, right? But we'll have to see. We rejected it up here. I'm hoping that we don't and we get through it. People get all excited when NIO or CCIV gets 6,000 orders for a car or a truck. Ford has 150,000 pre-orders on their Bronco. The F-150 is going to be a fleet truck. So I don't usually talk fundamentals, but you really need to rethink when you're looking at the EV play, who's going to benefit. So GM kind of scares me because it's already taken out highs and just off this bounce. Like, look at this bounce, right? From down here to here. Like, that's an enormous move for General Motors, enormous for GM, right? Now look at, let's not do the session. Let's just do the weekly, right? So now I've gotten to the top of the bar and I've rejected. So now I kind of have this base forming, right? So now I have a base and I'm at the top end of the base. See how the pattern's changed? So this was my pattern. We can actually draw this a couple different ways, but we're going to just draw this one because you're right there. So that's been my pattern, but you're starting to see the pattern. Oops. You're starting to see the pattern on GM change and it's starting to base. So you're going to just have to watch that base and see if that continues. Right now that would concern me. You're welcome, Aaron. Tesla and NVIDIA. So, and then we can do XPV. All right, I'm missing a couple here. Let me get back to these. So my bad. So here we are, Jerry, cat, no pun intended, Chipotle, CMG. So, again, we're just looking at a weekly chart. Look, this is where you are after the pandemic. This is where you're at now. I mean, I wouldn't buy this until I'm through this level. Until I am through this level with a close above 1553, 1554, I would not be a buyer. I mean, I can overlay these with it, but I keep coming down, breaking it. Usually the second time I have a much better chance. This was the first time to clear it, second time, third time. I'm not saying it doesn't do it, but this could base for a while before doing it. And just one of the reasons I'm suggesting that is the trajectory of this 21 week was straight up. Now we're going flat to down, and even this one's starting to curve. So you could see this get somewhat toppy. And let's look at the daily on it. So yeah, I mean, this clearly bounced off the 200-day moving average and had a monster move, and that's awesome. But this is not something that I'm going to chase here. And let's look at the volume and see how we're doing volume wise, because that will tell you, a lot. And you're seeing regular volume, and you had above average volume on this break. So this could continue. Let's just look at this because you're in a base. And so when you're in a base, one thing we can always use is RSI to kind of tell us what's going on. And this is telling you that you're probably going to go higher and challenge this or break through this. That's what the RSI is telling you. So, and you can just see this coming across. You're breaking this downtrend and you're higher than this peak. So this is telling you that we could push here and go higher. So it is possible for this to continue. That's a pretty bullish sign. I would just want to see it on a $1,500 stock. I'd give it 30 points. I mean, that's not a big move to give it. I don't think it is. So Tesla will do, and NVIDIA. So here you are with Tesla. And, this is from the newsletter. So let's just get rid of the RSI. You can see how it's positive. Well, we can just keep it in here for a moment. See how this RSI is taking you right here. And then this one's here. I mean, I personally do think that this pushes higher, but let's get rid of some of this stuff and just drill into the price of this for a moment. So the crux of this is you got really super tight in here, right? And that's why we got into it. Let's remove these segment lines and this segment line now. So we got super tight in here, and it just looked like it was ready, and it was ready, and it went. And that's really what you're looking for. You're looking for volume, and you're looking for it to push, and you're just looking for that one signal. And we got it. So when we did get that, it was worth taking the risk and getting involved. We had to use this low right here as the stop to get in. We broke this trend line up, and then we just kept going. Now you gapped up, but this bar was met by selling, right? Now, the only thing that I would say is, you see how this red is filled in? That does mean that you had a down day, but it also means that you had action in here, right? So it is coloring that part of it in. We need to hold this 677 line right here. 669, I have it at 667, I think, as far as where the stop is, because if you don't hold this, you're going to fill this gap. And some people might be fine with that. To me, I'm not, because if I fill that gap, after that gap, it means I'm below this red candle, which started this whole fall. And I don't want to be into this red candle, because that means that it's in charge again. That's how I view it. So that means that then I'm going to go to the 50-day. And if I break the 50-day, I'm going to the 21-day. I don't want to give up my gain. So that's how I would view this chart. Longer term, if you're looking at this longer term, and you can always get back in, I think that eventually you're going to take out these highs. Okay, I do. I really believe that this stock is setting up over time to really break out here and run. And you can see this long channel right here and how you're playing around right on that level. So I do think that this has major potential for later. And let's just keep going. NVIDIA. So there's not much to say here. Someone coined this, and I will steal it, as I've been pretty vocal that, NVIDIA is going to be this year's Tesla. And I agree with that. I mean, I think that this stock's just gone. I think it's off to the races. So, this was the level we couldn't get above. First time, second time, third time got above, failed back down. I'm just using the weekly on NVIDIA because it's easier to see it for the moment. And now just look, I mean, every week is a new high. Every week is a new closing high. So until that changes, I don't see a problem with it, but I would watch to look for a reversal. If you see a reversal in this, it could be fast, but I don't think you're going to see it. I think that I think we just saw it. We saw the completion of an evening star pattern that led to, and it completed because we got this low, basically got to this low. So essentially, it's null, and now we got back to the high of it and closed above it. So it's over. But the fact that we just keep bumping our head on this upper channel, or I'm sorry, upper price point, that usually leads to much higher prices. Like that's just telling you that there's that much demand for it. So we don't really need to look. I don't really need to look at anything else. Uh, so Apple and then TTD. So it's just sitting there. I'm in this in the newsletter from 133.75. I'm in the stock. I like it. It's very, very boring. It's not exciting, but I broke out here. I'm building a flag and I'm building it above my downward trend line. It's not exciting. It's not going to go up 10, 20 points in a day, but it's going to grind higher. And that's my hope with it. If it doesn't, I'm out. My goal is 130 on this one. So if that's my stop, if I hit that, I'm out. I do think we break through these levels and start grinding higher. And I think it's a grind, but I do think that it happens. And if I close below this level, I'll just get out of it. It's 3 points and I'll move on and look for another entry point. Um, TDD, I think this could be huge trade. I really do. And if you look at the top 10 list I did for Saturday, this is in there. And here's what I really like about it. So you have this channel that we're trying to flip. Okay. And this was where we closed. This is where we're sitting. And we're just wedged right in there. This is the level that I'm looking for it to break in order to confirm that we're going to move. The 21 and 50 are crossing to the upside. So the 21-day moving average, see how we are riding that up? That's letting us know that that is now support. And what it did was we squeezed here on news. Obviously, the news was out that this might get delayed, and that's where you started seeing interest in it. But what's very interesting here, let's go through this. Okay. This spike here, next day, you still had more follow through and a higher high. I think as people start to realize the fundamental story here changed drastically over the past couple of days, and what they thought was going to be a competitor is not going to be a competitor now, I think, for 2 years. So that's going to lead to some people looking at their fundamentals and buying, and you're going to see more holders, like more long-term holders, step up and want exposure and buy this. That's my belief. So getting through 78.70, and I think that you can push to that 97 level. I do believe that. And I like this trade a lot. I think it could be a big winner this week. Let's just see here. I didn't do Nike yet. So WWR. All right, let's do WWR. WWR. Put this up here. So really what you're seeing with it is, I mean, I get it. Westwater Resources, it's a small one. There's really no volume here. So there's really no volume at all. What I can do to see if this is significant is that, yep. So if you have like a low volume like this, because you've had like high volume over here and you get like one of these weird readings, see how like this is wonky. It's not really telling you anything. If you start throwing in relative volume, which is exactly what I did there, it starts giving you little indications of when something has happened, and something has obviously happened here. So let's just drill into that and see. So this is what you're doing. You're forming a flag. Here's your flagpole. And where are you forming your flag? Right on the 200-day, right? But we're not through. So I think you have to take that into account and say, okay, well, I really need to get through that. And I think that that's something that we're going to have to really figure out. How are you going to get through that? Like, and then where's that going to lead me to? Right. So like for me, looking at this, there's just so much noise the whole way up. I'd be really careful here. I mean, there's just resistance point after resistance point with this, even here. Right. Like you flipped it for now, but this 506 level, and then there's another one. Right. And then you have one up here. So like they're all over the place. The 642, you try to get rid of these. See, 642, you tried to get through it a couple times, you couldn't. So, and then there's another one here. So, and right, and that was rejected. That 565 was rejected here. So I have resistance points all over this thing. So I would just be cautious. And I wouldn't be, in a huge hurry there. So, yep, Sam, it is splitting 4-1. Can I buy Tesla next week? I mean, you can do whatever you want. I mean, for me, if you're asking me, am I buying Tesla here? No, I'm not. To me, the move was to buy it here. Now everyone is in, everyone's interested in it. I don't have an edge in the trade. If I don't have an edge, I don't put a trade on. So, I want to have an edge and I want to have the right risk versus return, meaning I want to be able to quantify my risk before I put the trade on. So no, I would not be a buyer here. I'd be more concerned about how it's going to act here. Even if it broke out of this level, considering I'm so far off this small base, I'd want to keep seeing it go up. And I would just be looking at getting in on shorter term time frame charts, 15 minutes, hourlies, things like that. So hopefully that answers your question. And let's just keep going. CR, SR. And yeah, I saw this with the banks. Let's go through this. Would you wait for a break in F? I would. I mean, to go through this, let's just go through this. Would you wait for a break in F? Yeah, I would. I would wait for a break, Jose. You have to see what it does now. It's had a decent move. Let's do CLVS and MVIS. So, yeah, I mean, you're definitely above the key level, right? You're definitely above where you need to be. Your volume's not there at all, but you're definitely above where you need to be, but you don't have any volume. So you can push right to the 726 level, but that's really where you're going to get to. I think you have this up here too, right? And that goes all the way back to 782, which this actually goes all the way back to what, right? Like right here, right? So, and you can see we barely got above it the one time. I mean, technically, if I move this up to the top of there, you're still above it. So 726, 82. You have a lot of resistance up here. It depends what you're looking for. I personally wouldn't play this just because I don't have volume. And this is Clove, CLVS, Clovis to Oncology. And then MVIS. So this is not something I would go near. See, I mean, you kept trying to get through this level 24, failing, came back, tested support 19 and a quarter, 17 and a half. You just can't, you're just not be able to hang on to it. So, and I've got no volume. I would just avoid that. Bitcoin. Yeah, I'll do Bitcoin. So let's just do it. Oh, just enter it this way. It's just easier. Looking for it. So, I mean, pretty clearly, let me throw these in. Everybody knows what this is. So, and I don't need this relative volume, and I don't need the volume, even though the volume is picking up. So all I'm really doing here on this chart, and we can get rid of this level for a moment, just so we can see it clearer. So all I'm really doing is going to the top of this trend line. So the very first thing it needs to do is get through a trend line. And it has been unable to do that. So 43, it never came close again. 39.9, you got through one day and closed above it one day until you form this, right, which tells you this is the high of the base. See this long red, like now we know where the moving averages are, right? See this long red bar down on that one day from 43,000 to 28,000 in a day. You never got over that. You've also never gone below it. So that does tell you that might be your bottom. That may be a bottom. And there's some argument about that on whether or not that could be it. But here's something very interesting to look at with Bitcoin. Volume by price. So, and let me go here and just show this very quickly. So you see this level, this is your point of control. This is where the most volume is going. So this is the first level that you'd really want to see it get above 36.7. 36.8, we'll call it. That's the level you really want to see it get above. So consider that. Until you get above that, I would not be, doing cartwheels or trying to stay in this. Um, it's got to start doing things for me to really want to be in it, and it's got a long way to go. So for now, I would just hold off. I mean, there might be trades in here, but at least get me above one trend line before I get involved. That's how I look at it anyway. WFC, talking about the banks, I like them. I would tell you to focus more. That's your daily. The stress test came through. Here's what's important about WFC. You got right through that top of that red long bar. If you look at WFC versus C, that did not happen. JP Morgan, that did not happen. Wells Fargo, it happened. So if you overlay the indicators with this, you're above your 21 and you're 50. This has stronger relative strength than the other names. And you could argue that, let's get rid of these now, that getting above this level could take me to here. So out of JP Morgan, Citigroup, this one's acting well. I'm not really sure how Bank America is doing, and if that's doing something similar. Yeah, maybe, but out of all those names, the one you just gave me, out of all those commercial banks, this is the best looking one. Getting above that level would be absolutely huge. So let's see if that happens. I would not be about it. Just so, hi, Jen. I'll go through that in 1 minute. Yeah, one day I can just do all crypto. If there's a big enough audience, it probably wouldn't be this. I'd probably do it as a separate show. But yes, I can. NVNX or NVAX. I'm sorry. And then I'll answer that question. So NVAX is pretty clearly telling you that the party might be over, right? So you tried once to get above it and failed. And now you start to look like you're rolling again, forming another H. So when I say H pattern, what I mean is here's the stick of the H and here's the body of the H. And then you have to see if they fail or they break. And if they fail, you don't really want to be in them. And if they bounce off of here, you do want to be in them. So you're really in no man's land here. I'd be very cautious here. I'd be very cautious with these names. I think a lot of them, they ran up, but this one is still just hanging right in there near highs. And then the other was BNTX, right? And it's still hanging right in there. So it's very interesting to see how they're acting. And this one's just falling apart. So doesn't mean that's going to stay down. These things are binary events. They come out and they fix something and, they tweak a trial. And then the next thing you know, it's up 80 points. So anything could happen here, but by looking at this, you need to stay above the 21 and the 50 here, or you're going to have an issue with this NVNX. So let's just keep going. Would I buy NVIDIA this week? Yeah, I think you're too late there. I mean, instead of buying NVIDIA, the one thing that I would say is if this continues to do what I think it can do and get above this 4160 level, I think you can just continue to buy this, but it's got to get above this 4160 this week. If this doesn't get above 40, this is the SOXL. It's the 3X ETF. If I don't get above 4160 this week, then it's probably not going to happen. And I'm probably going to come back down and retest, which is just going to be very, very frustrating. But I'd like to see it rally and actually do what I think it can do. And it's just not been able to do that. So, but I do like semiconductors, and I think that they may be the next group that lead us. But yes, I think you're late to the party. You're welcome, Jose. Yep, you got it, Kevin. So, yep, keep raising exactly. Keep raising your stops. Correct, Kevin. 100%. X, please. You got it. So with X, here's the thing about these moves, and I try to explain this, and I try to explain it a little clearer. For just because there's an infrastructure bill, I understand everybody gets excited. What that bill is supposed to be versus what comes out is probably going to be two completely different things by the time that they're done with it, right? So there's going to be 6 trillion and this much is going to go into bridges, and then by the time they're done, it's, a tenth of that. And I think that that's something you have to take a look at. So, don't buy it based upon, what people are doing when there's really good news, what institutions are doing when there's really good news on a bill, they're selling into it. So they're not buying. But you can see here clearly that we're not above the 50-day. And you could actually say that right here you have a bearish engulfing. And what a bearish engulfing is, I'll go over it again. It's when the red bar, which is the one that opened at the high, closed at the low, right? It's red. That means we had a down day. That encapsulated the green bar, right? And the green bar, this is the open, this is the close. So when they encapsulate like that, that's a bearish pattern. So I have basically a bearish engulfing bar on a rising channel that's in a bear flag because this red bar is in charge. So this is not something that I would feel warm and fuzzy buying. I would hold off. If I was in it and I had just one move below the 2364 level, I personally would be out. I would not be in there. So ENPH. So ENPH, you went right to the 176.55 level and you rejected. You have to see, and that was Friday. Option X was going to peg the stock as close to 175 as possible, right? That's what they do. So you have to see what type of follow through you get the next day. I would not say that this failed because of option expiration. You can make the argument that it doesn't matter. It either fails or it doesn't, but it didn't get through. We need to get through that level. If we don't, that's major resistance right now. And that is major resistance. You can see how it became support here, and then flip to resistance here. 1, 2, 3. And now we're trying again. So you need to get through that. If you don't, you have an issue. And it's that clear. So GMC is the only thing that matters. Okay. So let's just keep going. ARRY. So, I mean, it's just busted. If you're in this, hopefully you're in off the bear flag. But it's not something that I would be jumping into or be anywhere near. If you're in this and you're trying to figure out when to get out, you got to get into this gap and start filling this gap. If you don't do that, and I don't know what the news was. Was it earnings? Yeah. I mean, that's not what you want to see on an earnings call. So obviously there were some issues there. So I definitely would not be chasing this at all. So, Jack, I did cover it. I'll cover it again really quickly. So, but I'll cover it again very quickly. RSVA. So this one I kind of like. I mean, I know looks like it's a acquisition corp, right? So now I'm in a SPAC. And these move on news, and I don't know when the news is coming, what the news is, but that's really what you're doing. And I like patterns like this. And let me explain the pattern. This is like I call this an HFT. So basically, you're a high, tight flag. So right, so you can say it high. So here's my flagpole. Right? And you can see that move right there. And now I'm high up on it and it's tight, like $1.50 range. And I'm flagging. It's what you want to see these. So, high, tight flag, HTF. And I like that a lot. But this is an acquisition corp. So clearly there's something that's supposed to go in there. So we'll have to see. UPST I covered. Let's do this. This one I covered already, and I'm just going to cover it again for those that are interested in this because people look at this. So I was pretty clear the other day. I thought I was clear. I mean, I don't know who watches when, people have lives. Not everybody watches everything that goes on here, but I was trying to explain this, and I'm just going to walk through it. So this is your stop on this. And what I like about this is my point of control, right? So this is where all my volume is. And it's, yes, this red bar is still in charge, but to the top of this red bar is 2264. So if I'm buying along this line with this as my stop, or even using this as my stop, right? To give it, depending on what you want to use, you could actually use a close below 1737 because it hasn't happened. But if I wanted to be in one of these right now, this is the one that I would be buying. And I can see why people would start picking at it here. You're right at your 200 day, you're basing on your point of control, right? You're holding your support line. So this is the one that I would look at out of all of those names. So skills and DMTK. So let's just do skills real quick. So you have some work to do here. We can get rid of this now. So you have some work to do here, but you're doing it, right? You ran up, came back down, retested your 200, and you're setting up. So if you wanted to play this, you have to realize that these are the levels that you're going to have to get through. That's the level that you're going to have to close above and stay above, $23. Now, you could play it from here, but you see these two small wicks and small moves that we keep rejecting up here? You really can't buy this until you get through 21. And I guarantee if I come across with that 2095, that it comes in right along the, yep, you see how you're coming right along in this range? So you got to get through that. Let me just drop this down. You got to get through this 21 level before you would buy it. And then DMTK. So DMTK setting up. It's definitely setting up. So we can look at this, but let's just focus on this for a moment. You're based, you broke this wedge, you came down, retested the wedge, retested it again. Inside day, meaning when I say inside day, what that means is you have this green bar, right? And here's your low and high on that green bar. And then you have another day. Let's get rid of this line for a moment. And let's slide this in. Oops. So we can just not get confused by the lines. So, and then you have another day that falls right there, right? And then you have another day. And now you can kind of see why it's important, why when people look at these inside days, why it's important, right? Because it's getting tighter and tighter in that spot. So what you really need on these inside days is just a higher high of the bar or a lower low. That's all someone's waiting for here before they get involved. So if somebody sees a higher high on this one, so right now your swing on this is not really the high of this. That doesn't matter. Getting above 46 3/4 and you're going to see buying come in DMTK. So that's how I would play it. Shane, we did look at it. I like this a lot. Have we looked at Wish? Yes, we looked at it. I like it a lot. Reach out to me if you want to go over it again, but I'll leave this up. And it was in the beginning. I don't know if someone's going to do timestamps or not on that. Yep, Ro, I'll talk to you later. Let's just keep going. 26. Oh, cool. Thanks, Xavier. Appreciate that. So for who is interested in UPST, I covered it at 26.48. Thank you very much. Appreciate that. Skills I did. Net stay in or exit at one point. Net, I mean, to me, cloud is just basing. And you're going to just have to let it base or you're going to have to get out. I hate to be that not callous about it, but the move was here. And frankly, I tried to put on a trade and my stop was just too tight. Really what I probably should have just used was something like the 8 day and I'd still be in the trade, but I didn't. Breaking that 8 day because we never broke that, but I didn't use that. So it gave me, I used something a little tighter. I didn't want to break that higher low because of the space, because usually the first time you reject, and I didn't want to go through all this, but look at that move afterwards. It went and it looks great. If you truly were looking at a level that would say, when is this going to change? I always look for what it's respecting. And then if it breaks that, I would get out. So in other words, what is this chart respecting? It's respecting this 8 day moving average, isn't it? And I use simple moving averages, not exponential moving averages, just so people understand that. I don't care what you use. That's what I use. So you can use what works for you. But if I close below that 8-day, that would give me pause. And that's when I would get out. So if that explains it. Amazon. So Amazon, complete rejection, complete, utter rejection. There's no other way to say it. It wasn't that big of a move for me to really get involved with it. It's 1% after this move. So I didn't really, I saw this and I saw it break the 8. I really didn't see the sense in getting involved with it just because, and I'm sure people made money on trades on Monday with it, but you're a $3,500, $3,400 stock, 40 points is really not going to get my attention. A 1% move really doesn't do it for me. So, I didn't play it, but that is a clear rejection of that level. And now I'm below the 8-day, which means that there's nothing in here that's not going to stop me from getting down here. So it's not something I would be a buyer of. So, you're welcome, John, anytime. So, Uber 52 over support. Let's take a look. Let's take a look. So I see what you're seeing here. There's a couple things. First, let's get rid of this and let's get rid of these arrows. And let's start here. So I don't like how that's drawn. Let's draw it perfect. So then we can see really where you're at. Okay. So now let's throw these indicators back in. Okay. So yes, you're above that 50-day right here, right? See that? And you are respecting these 3 lines, which are starting to curl. So, and just so you can see this, which one's going to curl first? The 8-day is going to curl first, right? So so we can just see that. So you can see that the 8-day is going to curl and is curling and starting to point up. I need to get through this level. So for me, I would want to get through not only a higher high. At this point, I want to get 52 3/4, 53, and I want to see that and see that push. Now, this break was an earnings break, right? And you can see that when we broke that, that took you right here. So this red bar on this break of this support is still, the way that I look at it, is in charge. So that's 54.07. So you're going to have to watch that 54.07 level on that. You're welcome. Hey, from France. Hello from the US. It's so cool, the internet, like the people. I know I'm geeking out for a minute, but it's really cool, like the people that you can meet on here. Rocket. Let's do Rocket, and we'll go from there. But in regards to UPST and Wish, for those that are just coming in right now, UPST I went over. I think it's busted, and you have to watch. You can watch to get color on what I said about it, but UPST I think's busted, and Wish I think Wish can be a huge mover, and I gave levels in that. If you go back and through it, if you have time. If you don't, at least you have a 10-second clip right there. It tells you my thoughts. So here we go again, right? This time it's really going to go. All this did was fill the gap and come back down. And I know everyone keeps looking at this and waiting for it to break and do something. We've been waiting since here, and we did have a good move the one day. And this was fun this was fun with the IPO, but this is just in a range. And the real move is to get above 23.5 and stay above 23.5. And we're just unable to do that. So and it's kind of surprising too, because you would think that their business would be booming, but I would avoid it. I mean, if you're looking at trying to figure out how to get in it and stay in it, let's say you bought it on this break, like this wedge break, right? And you could make this a lot tighter when you zoom into it, right? So, but you'd have to just simply use this wick as your stop, like 1886 is your stop, and that's it. If that breaks, you have to get out. And then maybe you can stay in it, because now you're at the low end of this gap. So you're probably not breaking this gap again. And if you do, you have your stop set down here. But I'm in no hurry to buy that. Okay, so that there you go. So and the RSVA SPAC merger is done and becomes that on July 12th. Okay, so the question for you to answer with that, John, is going to be what price are they paying? And then that's the price that you should be looking at it possibly going to. So, yep, of course. I'll always just keep throwing things out there and I'll cover them. I appreciate it. But Etsy, sure, let's do Etsy. So the indicator's in. So let's just throw this 21 in because it's going to be relevant here. And so it's the 200. So let's just go here and let's just open this up and let's just focus on this time period. So you completely broke down, and we probably did it on some earnings event, right? So here's showing that's an earnings event when we broke down. Usually you can tell with these gaps, it was probably news. That's why, unless you're up big on a stock going into earnings, just get out. That's a lesson for another time, I guess. So 21 days pointing up, the 8 days pointing up, the 20s pointing up, the 50s pointing down. Something's going to give. Chances are that this is going to reverse and head up. What I don't like is this. I don't like that I can't get above this level, right? Supports and resistance lines. So we're going to have to see. The other thing that bothers me about this, Emily, is like, look, every bar is a wick, right? And what do wicks show me? Uncertainty. I don't want to see uncertainty when I'm going here. I want to see like these long green red bars. I don't want to see like this, well, we tried, but it didn't really work out. It's like, it's not inspiring. So I would wait for that before I get involved or the level that you really need is to close over this 191.51, get above that. And you have a channel right here that you can break. Like, look at this. No, that's not drawn perfectly, but let's do it up here. Right? So I like that. I mean, I like that you're trying. Let's see if it can do it. But I would wait for confirmation at like the 191.50 is where I was really at. But you can do 192. It's not going to kill you. So, yep, you're welcome, buddy. You're welcome, Jamie. All right, AOSL. And then we'll do EXPR. So I see what you're seeing in this one. And sometimes, I'm trying to get people to understand that you can see more by reading a price sometimes than just doing anything else, right? So you can see this level and we broke it, came back, never retested. So you can see the change in pattern here, right? And you can see more to me by understanding just basic pattern recognition than by starting the bells and whistles. But you see the channel and how we're dropping here and lower, low, lower, low. Well, this was the first time that we tried to hit a higher high right here, right? Let me just move this up so you can understand this. Done. And put that in there. Okay. So you can see that we tempted there, but what we did this time on the way down is we didn't hit a lower low, right? What we did was we found a bottom, which means that we have buyers and they're now respecting this line. So they're walking us up and now we broke a mini wedge or darn close to it if we haven't broken it yet. Nope, we haven't broken it yet. So if I was going to play this, I would possibly look at buying off this wick right here, right? And trying to get up to this 32.87 level and stay in it and then just move my cost up as soon as I could, or move my break or my stop up as soon as I could, rather, I should say. So that's how I would play that. But I like that name, Yep. And you could see right where that level rejected 21 day. That's right where you rejected. So essentially you're flipping the 21 day and then you'd be trying to head to that 32.87 and then walk your way up the chart. But I like that name. So you're welcome, Emily. EXPR. Let's do it. So tons of action the other day, and we're going to have to throw this in because this is relevant. Okay. So all three of these are relevant. So just to go through this is, and when you have smaller names like this, you really want to see where your point of control is. because that tells you where the majority of your volume is, the right. And then VWAP is all of it averaged together. And then so you can kind of use that. And this is VWAP based upon this pricing over here, right? This volume by price is determining this VWAP. So just so we're clear on that. So you can understand that, and you can VWAP anything, just so we understand that. See this peak? I can click on that and VWAP it, right? And that VWAP is going to be different than this. I mean, that's the thing you have to understand about VWAP. You can VWAP all over yourself, right? You can just put them you can put them anywhere. So you have to find out what works for you. But I like using this one because it is completely reflective on price. So it does give you an indication, and it's kind of interesting when you see where they land. But that said, the reason I wanted to put this in here is to make sure that you are holding that VWAP, which you are. You're actually using it as support at this point. The 8 and the 21 are up, and look at what's going on. They crossed to the downside. Now they're crossing to the upside. Huge volume, and we're at 5x. So this has potential. This can go. This could go up again. So it's definitely something to consider, and it's definitely something to watch. So I see what you like about it. So, yeah. So Verizon and DBX and Billy. Let's do let's do Verizon, DBX. I'll finish these last four, and then I'm already over by 15 minutes, so I'm going to have to jump here. Dropbox. Yeah, I mean, I see what you like. I mean, that's a really nice looking chart. You just have this up here, right? That's all you really have. So this looks beautiful, right? Look, I mean, look at it. You went right to the 8-day and bounced. And I think you can get up here. I do. 32.5. I'd like to see more volume. Verizon. I wouldn't touch this. I'm leaving these in now just so people can get familiar with them. But look at this. Well, we can get rid of this relative volume. We don't need it. We can get rid of this volume for now anyway. So look, you're riding the 8 down to 21. The point of control and VWAP are right here. And look how they're just rejection. So it's not something I would go near. Let's just keep going. CHX and BILI. I like the BILI. So the CHX is one I have in the top 10 list. If energy goes, you have to find the ones that are beaten down that aren't hitting new highs, because that's where people are going to start trying to put their money. So that's why I put this on that list, on the top 10 list. You have this wedge here. I'm right on a volume shelf. Let's just go through a couple of the things that I thought were interesting. So you had a spike in volume, right, the other day on Friday that was through the roof as far as what you see and what happened with that. You didn't see, oops, let's go cancel. And let's close this and get off of this and this. So what you're seeing here is you're just seeing it getting tighter and tighter. And with all that volume, what I really liked was, as much dumping as we had, I couldn't even take out a lower low. So, and that's what I'm saying. When you really start paying attention to detail, that's when you start learning. And you could just see when you can't, that's as much as I'm going to get. That's what you want to say. That's it. BILI. So 123 was your level. You got through it, and you just had a bad day with a wick. So this is why on Fridays you don't chase stuff, especially after coming off a huge option expiration a week and not last Friday, but the Friday before was insane. But 128.70, that's what you have to watch. I do like the trade. I mean, the fact that you're above that's huge, and you're seeing signs of it, that this is very real, right? So there's your level, and you're breaking above it. Right. This is kind of what you want to see. I wish that this was lower, but it's kind of what you want to see. So this is kind of setting up a little bit and telling us that it's mimicking this. So I like this, but I got to get above that 128.70 now. I have to clean that up and go from there. Let's do SFIX, and then there's a couple more, and then I'm going to have to wrap it up. So, and I'll leave this out there for a while before deleting it for people that want to watch it. again. So we can leave it up there at least for tomorrow. Um, it's just if I leave too many live ones up, people get confused and they're watching stuff a couple days later, and that's not good. See, you broke above here. I like that a lot. People love this company. They just love this company and they love the products. So I don't personally get it, but it doesn't matter. 66.97 is really what you got to get above. You got to fill that gap and then get above it. And this is like CELH. We were just talking about this. You either reject these or you flip them and they become support. Right now, this is rejecting it. So I would want to clear 67 before I get involved. And here's your downward trend. You broke it and now you're sitting on the 8th day. So watch that and be careful with that one. CTRN. I wouldn't go near this. I mean, here we can get rid of this real quick. I see what you're seeing, but you see, like, look, you got right to that level and rejected. The last, like, one stock that we just were in that did that was UPST, right? And we didn't like how that went. So I'm not crazy about that. I don't want to get to a level and reject. And the one thing that I hate more than anything that drives me insane because it shows as a green bar, we open at the low, but we close almost at this level. And so all this is price rejection. It's not something that I'd want to chase. And then Futu, I just stayed away from because, I felt like they were going to do something else again, but like they did the secondary here. And I just didn't want to be caught in it again because the company does need money. So it could do a secondary at any time. But, that's me and how one of my concerns when I trade. So I'm aware of it. And it keeps me out of trade sometimes, and that's good and that's bad. But see this H, you broke the H and then you came back through, right? And then you broke out. This is a clean breakout. We traded this from 146 to 155. And then I rejected this level and that was enough. And it just bounced and then broke through. Now you have a flag. And it's important because we just talked about these gaps down, and this red bar, this open right here, is now becoming support instead of being resistance. And that's really what you want to see. So it is setting up and it is sitting right above. Like, look, go across this just so you can see where it's sitting. I mean, it's sitting right where it needs to sit. It's sitting perfectly. So it could work. It very well could work. So, hey, Brandon, we're just wrapping up. Throw out one really quick if you have one you want to go over, and I'll go over it for you really quickly. SEDG. And I'll leave this up for a while. I don't know if someone usually does timestamps on these or not, but I'll leave it up for a while in case you want to go through it. So, Solar Edge, you're breaking out here, but let's look. See how you got to the 200 and you rejected? Right? You got right to that 200 day and you rejected. So until you get above that, I wouldn't touch this. So, but all right, everybody, I'm going to wrap it up here. So as always, thank you. If you need anything, reach out and just email me on Twitter, or there's so many different ways to get a hold of me now. So, all right. Thank you. Have a good evening, everyone.